Right. Good afternoon, everybody. Thank you for joining us. The noonday gun has just gone off in our Cape Town studio where we're based, and it signals the start of our weekly webinar. My name is Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor, South Africa's leading independent real estate content and education platform for more than 16 years. So we're passionate about serving the South African real estate industry and business community through our digital platform, rei.co.za, our monthly digital magazine, Real Estate Investor, our weekly webinars, and regular live in-person events. So welcome to our regular investment webinar brought to you by Real Estate Investor alongside Signatura. And I'm delighted to be your host and moderator for today. And the topic for today is why the Western Cape is a prime investment destination and why new developments like Riverlands are making an impact. So along with our two special guests today, plus a special message from our third guest, who I'll introduce you all very shortly. So before we dive into today's content, let's cover some important housekeeping details, particularly regarding the webinar recordings. So great news for all our registered attendees. A recording of today's webinar will be meticulously crafted and made available to you. So expect the recording to hit your inbox within the next 2 days. For our esteemed REI newsletter subscribers, your exclusive access awaits on Friday through a convenient online link. Alternatively, for swift and seamless access, you just head over to the rei.co.za website. You navigate to the education tab, you click on event replays, and there you have it, your webinar choice for viewing at your leisure. So we understand the value of flexibility, and we want to ensure that you can revisit this valuable content whenever it suits you best. So whether it's delivered to your inbox, available through the newsletter link, or accessible on our website, we definitely got you covered. So attendees, your active participation is not just welcome, but highly encouraged. During our webinar today, this is more than a presentation, it's a dynamic discussion. And your questions play a crucial role in shaping it. So if you have any queries or thoughts you'd like to share with our esteemed panelists, please don't hesitate to engage with us. And you submit your questions seamlessly. You utilize the Q&A box conveniently located on the bottom right hand of your screen. Not the chat box, that's reserved for general comments. So let's keep the conversation flowing smoothly. Your questions will be addressed during the course of the webinar, so our dedicated Q&A panel discussion will be in the final session. So fire away with your inquiries and let's make this interactive session as engaging and informative as possible. So without further ado, let's dive into the heart of today's insightful content. Our focal point for today's webinar is why the Western Cape is a prime investment destination and why new developments like Riverlands are making an impact. So in this illuminating session, and it will be, we'll unravel the success story of the Western Cape with a spotlight on Cape Town, a true economic, employment, investment, and tourism powerhouse within South Africa. And we will discover the compelling reasons behind Cape Town's stellar performance and why the current moment presents an opportune time for property investment. So join us as we navigate through the intricate dynamics of the South African property and development markets. We'll shed light on investment trends, including the profound impact of semigration, supported by latest stats in the residential property sector, consistent performer for a decade. It takes center stage, showing its resilience and potential. So the climax of our discussion unveils a gem in the Cape Town's landscape, the launch of the Riverlands property development. So prepare to be captivated as we delve into this exciting new growth node, unraveling details that promise to redefine the urban experience. Stay tuned as we embark on this enlightening exploration, dissecting the elements that can make the Western Cape a prime investment destination and why developments like Riverlands are leaving an indelible mark on the landscape. So let the journey begin. So ladies and gentlemen, it's with great pleasure I present to you our esteemed panelists for today's engaging discussion. First up, let me introduce you to the distinguished David Cohen. He's the Managing Director of Signatura. And David is at the helm of Signatura, a trailblazing property development company based in Cape Town. And they're renowned for setting the trend in redevelopment of urban spaces in SA. And Signatura's influence extends beyond Cape Town to selected areas of the Western Cape, including Mossel Bay, George, and Knysna. David, we're delighted to have you with us today. Would you like to take a moment to greet our audience and perhaps briefly share a bit about yourself and the exciting initiatives happening at Centura? The floor is yours.
Thanks, Neil. Thanks, everybody, for joining us. Yeah, Signature's it's been around for over 10 years now. We were founded by John Robbie, founder of the Robbie Property Group, and we have an active association, and we collaborate quite a bit with Robbie over the time. They kind of deal with more of the estates, Century City, and they're known for a number of projects around there. And we started out more of a urban renewal company. We started in Little Friedhoek in Cape Town, taking old properties and renovating them, expanding them. I think our first project was a little one called Horizons, and it had 5 units in it. And we are now going to talk about, hopefully a little bit later, Riverlands, where the first phase has over 300 apartments. So, we have come a bit, we've gained quite a lot of experience, and it's been great. As you said, we've been actively developing in and around Cape Town. We expanded into the garden route during COVID. We saw that there was a real interest, and I think that falls into that semigration and just investment in the Western Cape. And so we are now actively building our third development in the garden route, and we'll be breaking ground in Knysna next year on our fourth one. So Signature has been an active Western Cape participant. Haven't been able to get us to KZN or to Johannesburg yet. Not sure if that's in our strategic plan for the next few years. We like Cape Town, we like the Western Cape, and I think we're going to stick around here.
Awesome. No, well, that's great. I think you should stick around because all the action seems to be happening there in Cape Town, David. So I would stay around where the action is. So our second guest is Siplamanda Mkunazi. He's a distinguished senior economist at FNB with a profound understanding of the South African economy, and he brings a wealth of knowledge to our discussion today. He earned his MCom in economics from the University of Witwatersrand, began his career as economist at the Competition Commission. So his journey led him to various roles as an economist at various banks, culminating in his current role at FNB. And today he is one of the masterminds behind the highly regarded quarterly FNB Barometer, Property Barometer, and the FNB BR Building Confidence Index. We're thrilled to have you back on our Invest On webinar, Siplamanda. Would you take a moment to greet our audience, provide a glimpse into your background and the pivotal role you play at FNB? The floor is yours.
Thank you. Thank you so much, Neil. It's good to be back. I must say I miss the Cape Town, the Cape Town market. I always find it easy to speak about the Cape Town market because there are so many markets one can speak about. I can speak the whole day about that market and how at the moment it's performing better than anywhere else in the country at the moment. But just to speak about my background, you have mentioned almost everything. With this for over 10 years now. I wouldn't say I would do it in my sleep, but we've seen the trends. We've seen the trends, and I'm looking forward to the discussions.
Wonderful. I look forward to it, and I'm really excited. And then, of course, our other distinguished guest, Alderman James Voss. He's from the Mayoral Committee Member for Economic Growth for Vibrant City of Cape Town. He's at the forefront of steering the economic trajectory of Cape Town, overseeing a comprehensive portfolio that spans critical sectors such as business development, tourism, fleet and facility management, as well as strategic assets and property management. Regrettably, due to an unforeseen urgent meeting, Alderman Voss is unable to join us for today's session. However, he recognized the significance of this webinar and he has graciously shared a short video. We hope it plays. So if I can just ask my colleague, it's only a minute long. So if you'll just bear with us. Okay, what I'm going to suggest is there is a bit of audio issues here. So I'm going to say to my colleague Yashik, if you can just close down the video, and what we will do is we will add the full video onto the webinar recording. So we ensure that everybody gets that. As I mentioned earlier on, we will have the webinar recording. Great. So what I'll get in right into the presentation right from the start with Siplamanda to set the scene. I mean, Siplamanda, after all, you're at the forefront of what's happening in the South African economy. You understand the dynamics of what is happening, and also in the property markets. And I know you've got a wonderful presentation to set the scene for us. So I'm going to hand over to you to take it forward from here.
Wonderful. No, thank you so much, Neil. Greetings once again. So
Yes.
I want to start by, just laying the flow, just laying the ground. This is making things easier for David later on, who's going to come and give more detail about the specific property that we're talking about today. But I think, Neil, it would be amiss of me not to mention just the economic environment that we are in at the moment in 2023. We are dealing with a cost of living crisis. Inflation is quite high. And as a result of that, we are seeing interest rates being at high levels for a long time. And this is not just a South African thing alone, by the way. Elsewhere in the world, across the globe, we are seeing economists are speaking about the high for long themes when it comes to interest rates. And of course, we've had to unfortunately deal with highly intense load shedding for some extended period of time. And if you are in this part of the country, you will know that we are dealing with load shedding as we speak. But I think it is also important to point out that despite all of these challenges, the South African economy has displayed resilience and adaptability, assisted by the private sector. For example, if we were to think about how the private sector, chipped in when we faced that energy crisis with investing in new and embedded generation capacity, which we expect to come in line gradually as we move into 2024. And in fact, some of it has already come into line. We also saw with the interventions in the February budget, which incentivized households to invest in solar panels. So all of those factors have in some way, and we saw, by the way, the banking sector, the funders coming in as well, coming with innovative funding mechanisms. If you, for example, think of installing solar panels on your roof, we saw a proliferation of financing solutions from various kind of lenders. So with those assistances from the private sector, the economy of South Africa was highly resilient against these headwinds. But if we cast our eyes into 2024, you start to see that the impact of these constraints starts to ease a little bit. This isn't to say that all of these are going to immediately go away, but it is to say that the collective strength of these headwinds is probably going to ease as we go into 2024. We do think that inflation is going to continue tracking down to the target. The Reserve Bank, in their most recent meeting, did revise down their inflation forecast as well, to suggest that these pressures overall are starting to ease. Of course, you will see, as we go month to month, that inflation is going to be a little bit, bumpy, and this is because of various reasons. One of them is just the uncertainty, especially around the issue of prices of oil is one of them. The biosecurity issues that we are dealing with, avian flu, foot and mouth disease, those factors that are very difficult to predict. But overall, the overall trend suggests that inflation is going to go back to target. And with that, with inflation going back to target, it means real household growth is going to come back, which is something that has been missing in the South African economy over the last 2 years or so. The last time we saw a positive real growth in wages was in 2021. So with inflation tracking lower, real wages are going to tick slightly positively. And with that trend as well, we think that the Reserve Bank is done with their hiking cycle. And now the cutting cycle is coming into view in the second half of next year. Again, that speaks to the theme of higher for longer, due to the fact that inflation is going to get back to target, but it's going to be, sticky in some months, and in some months going to be a little bit more bumpy. On the energy issue, yes, it is still part of it's still embedded in the system, but we think that over a longer term, it is going to become less of a binding constraint to growth in South Africa for two reasons. One is that, private sector has adapted. It will take up to between stages 3 and 4 for load shedding to have some impact on economic growth, because corporate South Africa has invested in alternative sources of energy. So we have learned to operate even in higher stages of load shedding. But even besides that, there is a lot of private generation that is expected to come online, especially in the second half of next year. So as we move into 2024, this becomes less of a binding constraint to South African economy. So as a result of that, we do think that growth is going to start picking up from next year onward. So all in all, I would characterize this year as a year of peaks and troughs, where some of those constraints are peaking. They're going to become less of an issue going into next year, and growth is going to start picking up. Now, if we think of the South African property market, the property market in general, so maybe let me start with what we are seeing globally very briefly. Globally, I would summarize the trends as telling us that the market is responding to high interest rate. We are seeing volumes are lower just globally. Real house prices across many regions are also under pressure at the moment, and South Africa is one of those countries. But if you were to compare South Africa with the OECD countries, we are somewhere there in the middle, so somewhere close to the 50th percentile when it comes to real house price growth. So at the moment, yes, our house price growth is below inflation, but we compare relatively okay compared to what other countries are seeing. It's just a combination of what is happening around the globe with the high interest rate environment. Now, drilling closer to the domestic market, of course, we are seeing this reaction from the high interest rate environment. Volumes at the moment are down by about 28%, which is by any measure a significant outcome. But if we were to compare the current cycle to the previous global financial crisis, you will see that if you were to take volumes from a point where they peaked to a point where they troughed, you will see that the downturn in the current cycle, if you look at the chart on the right, the downturn in this cycle has not been as severe as we saw during the global financial crisis, especially if you consider that, during COVID, we lost millions and millions of jobs. And if you also consider just the pace and the scale of the hikes in interest rates, it was very quick, it was swift, and we saw interest rate very quickly going back to where they were during the pre-COVID environment. So yes, the market is under pressure, but it's also showing some signs of resilience if you compare it to the previous cycles. But of course, we are talking about the Western Cape market during in this webinar. So the Western Cape, I would characterize it as almost an outlier in what we are seeing everywhere else in the country. Of course, you would expect that house price growth is going to get lower with the high interest rate environment, but compared to the country average, at the moment, the Western Cape is performing relatively well. Almost all regions, almost all districts within the Western Cape are performing above the country average. And that chart there just tells you year to date house price growth that we are seeing some regions, especially those along the Garden Route, that are benefiting immensely from the semi-migration trends that we are currently seeing. And this semi-migration trend is also supporting some other, not just overall market, but niches that we have seen underperforming in the past. Niches such as holiday home buying that has not been a prominent performer in the recent past. It has now come back, especially in those regions. The buy-to-let market is also coming back in the market, especially in those regions, benefiting from those immigration trends that I spoke about. If we drill down into the Cape Town regions, there again you see a similar kind of a trend, that house price growth in most of the sub-regions within Cape Town is performing better than the country average. And of course, as I mentioned, you would expect that in some instances, price growth is going to slow alongside the poor economic environment that we are in, but as well as the very high interest rate environment that we are in. Also keeping in in mind that many of these regions in Cape Town are coming off from a high base. We did see a massive boost in house price growth, especially when interest rates were at their lowest level in decades, and that caused house prices to react very sharply on the upside. And now we are seeing some reversal of that at the moment. But we're also seeing the rental market, performing better than everywhere else in the world. If you look at vacancy rates, for instance, compared to major cities, compared to Joburg, for instance, vacancy rates in Cape Town are almost even less than half of what they are in Joburg. And here there are three things that have benefited the Cape Town rental market. The first one is, I've already spoken about this immigration trend that we are currently seeing. In fact, this immigration trend almost replaced the immigration trend that we saw up until 2019. So now you find people, instead of leaving the country completely, preferring to move towards the coast, especially the Western Cape region, and specifically the Cape Town market. So that's the first thing. The second one is the resurgence in tourism that came after the aftermath of COVID-19. If you look at tourist volumes in Western Cape and Cape Town specifically, volumes are actually now higher than the pre-pandemic level, and that is benefiting the short-term rental market. So we've got those two trends supporting both the long-term as well as the short-term rental market. But the third thing is what I would call the demographic dividend that Cape Town is starting to benefit from. We are seeing, especially with the new developments that are catering for the Gen Zs of this world, that that value experience, sustainability, and connectivity, and these new developments that are coming online and ticking all those three boxes, seem to have favor amongst your Gen Zs, and so the market in Cape Town is benefiting from that as well. So overall, Neil, I would summarize the Western Cape and Cape Town market specifically as performing much better than what we see elsewhere in the country. Of course, the market is reacting to the high interest rate environment, but even with that, you still see a better performance in the Western Cape market. So if you were to ask me where we are in the property market cycle at the moment, I mean, you can decide where you want to put that dot. But when I look at the key drivers of the market, I am convinced that if we are not at the bottom already, we are getting closer to the bottom. And in the next few months, or in the next couple of months, we should start expecting, an upturn. Of course, there are questions around the strength of that upturn. It also depend on the pace at which the MPC cuts interest rate. At the moment, the expectation is that the cuts in interest rate are only going to be gradual. We expect a 75 bips cut next year, which will be followed by another 75. So there's around about 150 bips cut in the system at the moment if things were to stay the same over the next 2 years. And so it brings questions around the extent to which we are going to see that upturn. But that upturn is going to come as long as interest rate cuts start coming through, which I mentioned. We expect that to come in line in the second half of next year. So I will stop here. I'm sure the audience have got a number of questions, and I saw you taking notes there quite aggressively.
Yes. No, great. Thanks. I think, Siplamanda, you set the scene so nicely. I think it's going to be lots of discussions around here. Could I just ask you to stop sharing your screen, and then we can get back, because obviously I want to get David up onto the stage, the virtual stage, that is. And so thank you for setting that scene, Siplamanda. As I say, I did take furious notes, and also I encourage the audience, if you do have questions, please put those questions into the Q&A box. We will deal with them at the end of the presentation, and we'll try to get to every single one of them. If not, we'll get it on the video. So next one would be, first of all, to David. I mean, David, if we start looking, I mean, you set the scene very nicely right up front about Signatura, where you've been and all that kind of stuff, and now you've really got a really exciting development. So let's just talk about the market in general. I mean, it's quite optimistic and it's exciting, and I hear what Siplamanda has said, but you're playing in this sector, and what are the unique strategies or approaches that developers are taking to differentiate themselves in current times? And what kind of approaches are you taking?
Yeah, so I think, first you have to look at the fundamentals. Property fundamentals, you can only do so much if, risk on, risk off, people want to buy or don't want to buy. We are a very cyclical and economically driven market, interest rates, growth, all of these kind of macro events play quite a much larger role. I wish I could say that I could just, snap my fingers or put some nice material together, which we have, and I can hopefully show it a little bit later. But in the end, the economy needs to be working. People need to be working and feel confident. We always talk internally, and we've mentioned it as we've spoken before, Neil. We're not selling soap here. If you want to try a new soap and you go to the shop and you buy it, it didn't work out, you'll just go back to the one that you bought before. We're selling, although what we think is reasonably priced in the market, they are high ticket items. We're starting out. You're talking about spending well over $1 million to several million rand on a capital purchase. So people have to be sure. They have to be sure you can't take it with you, and so we need confidence. People need to be confident and they need to feel good. I think we're getting there. I would have put my little dot just a little bit closer to the other side of the bottom there, Sipa, if I were you. But as you said, everyone gets to choose where they want, because yeah, I think in the market, certainly COVID played an unbelievable role in what's going on. On one side, you had a historic lowering of interest rates, but there was no confidence. What's going to happen tomorrow? We, maybe other people, guys who were selling out in the suburbs and in the estates and all of that, they may have done very well. I know that certainly in the garden route, a lot of people moved into several estates. It's not really where we play in a lot. I know, speaking to our compatriots at Robbie, they did a development outside Durbanville, which boomed during COVID. But from a sectional title kind of urban renewal angle, we definitely took a little bit of a break. Although we did launch a few developments, and the people who bought in and took a punt, they did really well. We launched the Flamingo, which was one of our buildings that we did in Sea Point on Regent Road in November 2020. And I can tell you, the guys who bought and the ladies who bought there, they've done very, very well. They had what I would call, boom time capital appreciation and rental growth. So it really does depend on where you get in the cycle. And I think in terms of how we differentiate ourselves, what the feedback, we've been in this industry for a while. Signature has been going on for 10, 11 years. And it's a quasi family business. I run it with my father-in-law. We have two other partners, and taking his experience through Robbie Property Group of the last 30, 40 years. What we know is that people love property, but it can be a pain. Everyone wants, you want to buy, especially from an investment point of view. So what we try and do is make the purchase and the management process of buying, especially buying off plan, as simple and as easy as possible. And so by doing that, not only do we design buildings with our buyers in mind, but we also offer a number of management services. So once you buy from us, we build it, we hand it over to you, and you can immediately give it back to us, and we'll manage it for you on whether it's a long-term tenancy basis or short-term tenancy basis. We have both subsidiaries that run it. We'll furnish it for you. We'll manage all that process. And I think that's what people are really looking for. They want property as part of their asset blend. But they want it to act like a share on the JSE. They don't want to have to think about it and who's managing it and is someone getting the wall painted and all of that. And I think that we do that. And that's really, really helped our investors who have followed us over the years really be comfortable, because they can just treat it like any other asset. They get a statement every month. The rent comes in, and they don't have to worry about changing the light bulbs, I guess you could say. So that's been a big differentiator. I think think those add-on services have been a big part of where we pushed. And I think it's really been successful especially since COVID, has moved on quite nicely.
Wonderful. Good, great. I think great to set the scene over there. And I think I probably could just add to that, David, price and location become exceptionally important. I mean, that is such a critical thing right now. I mean, we've opened the can of worms on the semigration. I mean, the numbers of families, I mean, I've heard of stats, it's more than 120 families semigrating a week. I was in Johannesburg yesterday and Monday. You were also in Johannesburg yesterday and Monday. I spoke to every second person. They said, we're moving to Cape Town, to the Western Cape. And I think Siplamanda is seriously thinking about it as well. So there's demand. So before I let you answer that, David, I'm going to ask both of you. So I'm going to get to Siplamanda first, because it's quite an important question, because you were talking about that cycle, where that cycle is. And I want to address the elephant in the room in the current market. And what is stopping investors and buying from purchasing property in today's market? Because 2023 has been tough. I mean, we've seen obviously high inflation, interest rates, as you mentioned, it's come now to a standstill, we hope, and I'm sure it will be. And I definitely agree with your sentiments over there. But maybe just talk maybe from a banking perspective, and you'll be talking to your colleagues, I'm sure, at FNB, and you'll be saying this and this and that. This is what we should be doing, guy. Are we going to open the taps? So maybe you just tell us a little bit, Siplamanda, what is stopping investors? Because I think that helps everybody. I mean, with people, and we saw those Western Cape numbers, and there's high employment figures. There's a lot happening. So maybe just your thoughts around that.
Yeah, look. One of the key factors, and David did touch on this, one of the key factors that has been missing in the market is sentiment, confidence. And this did play a big role in during COVID, especially when interest rates were low. And you would have expected, look, volumes did tick up, right? Especially from those low levels, but we are still nowhere close to where we were during 2008. And one of the key changes is that there has been just a lack of sentiment in the country at the moment, and that has many facets. One is just the poor service delivery. People are becoming much more worried about whether their properties are going to keep the value. The poor infrastructure, especially in cities. I'm not going to mention name. There are some cities, especially along the coast, that are not doing well at the moment with the dilapidating infrastructure. Of course, there has been a series of unfortunate natural disasters that didn't help the situation. So there is a general worry around whether properties within these conditions are going to keep value. From a funding perspective, that also is a little bit of a worry. But those high unemployment numbers are the biggest factor there, especially when it comes to properties in the low end of the market, where affordability generally becomes a little bit of an issue. I mean, we get to, yes, the economy is turning, but we still see some sectors of the economy still lagging behind. For example, we just heard yesterday that a certain steel company is thinking of laying off employees, generally employing employees in the lower earning scale. So there are still some fundamentals in the lower end of the market that are constraining better activity there. So those couple of factors for me, Neil, have been a little bit of a constraint in the market at the moment. But however, I have to mention that there are certain subsegments of the market that have done exceptionally well. Those that were able to read market conditions correctly, as David pointed out, they did benefit immensely, especially where infrastructure investment has also followed through.
Okay, great. And I think, you put out those stats on the rental market. And I just want to say to our audience, tomorrow we're actually unpacking the South African rental market. And I love that slide that you put up there, Siplamanda, where the vacancy rates in Western Cape exceptionally low. And of course, people like David are getting that benefit. And and David, I want to just, share that same question, which I asked Siplamanda to you. What is stopping investors from a developer's perspective in today's markets? What is it? I mean, you're launching a big development tomorrow. I mean, this is like a flagship in the Western Cape. So maybe just tell us what in your experiences are you seeing why they're not jumping in? The rental markets are going up. The Airbnb market's one of the biggest in the world. It's flying short-term, long-term, as Siplamanda mentioned. So what is stopping them?
Well, actually, I don't think there's much stopping at the moment. To be honest, I think if we had had this conversation a year ago, we could have talked about a number of things. Look, beyond the fact that I think almost more when we speak to clients, especially, talk about sentiment and interest rates, I think while I certainly hope, and I think all of us on this call hope that we do get interest rates lowered over the next year, 2 years, I think it's more about just certainty of where they are. Even if they just held steady, I think people, because the increase in rates has been just as dramatic as the decrease, I don't remember when they started the cycle, but I mean, you went from 7% to 11 and 0.75%, in a matter of a year and a half, I think, or whatever it was, but that's dramatic. So all of a sudden people are seeing a significant and material deduction in their monthly, in their how much their disposable income they have, and that's all going to the same property that they may have had already for 10 or 15 years. So I think people just want to know, is this it? Even if it just holds, then I can plan and I can understand where I'm at. So, and that I agree. I think, it was actually, I think if we look back in another year, we're going to see the decision now having held as the critical one. Almost that is your top of your rate cycle, I hope, unless there's another shock or something along those lines. And now we really can get into the easing, even if it's only, 5 or 6, 7 months down the line from now. At least we know that we're in that cycle. And I think people are actually already anticipating that. And that's one of the great things about buying off plan. And we'll get into it a little bit later, but I mean, what I'm talking about, people buy today, is only kicking in the middle of 2025. So obviously, we're not expecting that people are, market timing the interest rates, but it certainly gives people the confidence that we will certainly be in a much better position from a cyclical point of view than we were a year ago. And that's what's one of the great things about buying off plan is you have that time to see, not to see, but to watch the market kind of improve as you've already locked in your price.
Okay, wonderful. So, and we're going to give you the opportunity just now, David, to obviously, I know you got a couple of slides you want to show the audience, your new development, give us some background. But before we get there, I just want to ask Siplamanda again, if we start looking at that, what is the bank's policy now? Because we're sort of in between, we're going to start seeing an upturn. I almost equate it, and I could be right, I could be wrong. It's just, it's just my opinion. It could be, we're close to round about a 2002 where we were, I don't know if you recall, probably 2001, where we had a massive boom. 2002 to 2006, I mean, it was capital growth of, we were talking some years it was 37% high, and there was 20% and really going up. We obviously have to address, and you actually covered all the touch points, the load shedding, energy, all these different things, which we have to fix, we know. And I think we're a resilient country, we know. My question to you is, there's a lot of investors here now who are saying, I need to get bank finance. Will Siplamanda give me the money to be able to? So when is that going to happen? Because that kind of is what was the uptick of that market. There was people refinancing properties and all that, which started that boom and that growth period. So my question to you is probably on behalf of the audience, is that, Siplamanda, when are you going to open the taps, or are we still a bit skittish, we're hanging back? When do you think, in your opinion, and I don't want you to put you in a difficult position here, that your colleagues now take you on and say, Siplamanda, how dare you say that on a webinar? So your thoughts around that?
Yeah, there's a reason why we sit far away from the credit guys, because our thinking processes are completely different. Timing, Neil, is very difficult to put your finger on. But just generally, how you would know that the cycle is turning is, once you start seeing interest rates being much more stable, which we are getting there now. I mean, we've had 2 meetings already where there was a hold, and you also 3 meetings, in fact, where there was a hold, and you look at the voting patterns, which tells you about the confidence of monetary policy committee members. This time around, we had 5 members voting for a hold. So that, to me, suggests that they are getting a little bit more comfortable around where the interest rate, that the level of interest rate now is sufficient to reduce inflation, and probably then the next move is going to be on the lower end, to lower interest rates. So that's when you will then start seeing those that are on the margin, especially coming back into the market. We usually look at first-time buyers. We usually see first-time buyers being the first ones to jump back into the market when you start seeing that interest rate cycle turning. So if I were to put a timeline, I would think that over the next 6 to 18 months, 6 to 8 months, we probably will start seeing signs of a cycle that is now firmly on the upside. But of course, there are a number of things that can happen in between. I mean, we are dealing with geopolitics. There's uncertainty there. A number of factors that are outside of our control. But at the moment, I think we are still on our way down. In the next couple of months, we should start, start picking up.
Wonderful. I think that sounds like good news. So, David, I'm going to hand over to you now, because you're launching your flagship development, Riverlands, to the public tomorrow. And I mean, this is an incredible development. I'm not going to share too much because I'm going to leave that to you. What can the investors and potential owners expect from this development, and maybe share some of the amenities and the background and maybe a little bit why you decided to go in that particular area. So I think you want to share some slides. Is that correct there, David, on that? Or
sure.
Yeah.
Let me do that. Hold on. So can I get this right?
Yep, we can see your screen. Yes, got it. All up. There we go.
So it really is exciting to introduce Riverlands, which is the redevelopment of the old River Club on the edge of Observatory Rondebosch area. I think people, certainly Cape Townians, will know the site. It is really, really central, and I will get into all of the detail. First, I'd like to play just a little film. Hopefully, it comes over nicely on the on the Zoom
audio. Yeah, great. I think what we'll do is we'll add that to the recording, just for everybody, where you will get decent audio and visuals and that kind of stuff. So, all good.
Sorry, I don't know if it was a little jumpy. It looked good to me, but
yes.
I'm not sure if it worked out for everybody else.
Yeah.
I think we just wanted to show. So Riverlands obviously is the precinct. We're launching, and I'll get into the first phase of the residential, but. It's 14 hectares. We are actually in one of the major benefits is that, I'm not sure if you can see my mouse, but we are connecting the Barkley Road. We're building a bridge over the Liesbeek and Black River over there, which will be able to connect you right into town. But even more importantly, from Riverlands, you'll be able to cross the river and then join the M5. So 5 minutes to get onto the N1, probably 6.5, 7 minutes, not even, to get onto the N2, and from there, or another 10 minutes or less to get into town. So from a centrality point of view, you can see it really is right in the middle. The southern suburbs, northern suburbs, town, really very much on your doorstep. And I think that is a critical element. for a lot of people. I was actually on Cape Talk with John Matham, and he grilled me about the traffic quite a bit. And I think, you know, we one of the major things is, you know, as the developers, we are with our partners, you know, investing millions into upgrading the infrastructure in and around the area, both environmental with the rehabilitation of the Liesbeek River in front of Riverlands, but obviously the road infrastructure as well. You know, Cape Town has pretty good traffic, certainly commuter traffic, and we hope that this can alleviate that. But one of the great things about people who will be able to live here and hopefully even live and work is that, you know, traffic actually becomes a thing that pass. And I think that's where these larger mixed-use precincts really come into play in terms of allowing you to kind of keep your neighborhood and what you need, you know, very much within, you know, walking distance. So for that, you know, there will be offices, residential, retail, and restaurants. There actually 60% of the precinct is going to be public open space. And there's also going to be a First Nations Heritage Center as part of the public domain as well. So a lot to take in. So this is a representation of what's going to be there. What you would see if you have driven on the M5 recently or up and down the Liesbeek Parkway is actually these two buildings, and there's another one there. Those are Amazon's headquarters. They are moving in at the end of November 2024. They will be building another 2 buildings. I think the overall office space is roughly 50,000 square meters. To give perspective, in 2015, we redeveloped Triangle House on Ribbeck Street in town, which was a 23-story office tower, it was the Radisson Blue Hotel and Residence. It's now a Pullman Hotel. That was 22,000 squares. So those buildings are going to be double the size of that redevelopment in terms of just office space. The total residential space will be roughly 30,000 potentially, and right now, as part of the first phase, the construction of the Riverlands Mall, which is 12,000 square meters of, you know, shopping center with, you know, massive 4,000 square meter, what is almost assuredly a very, very fancy Checkers, and a number of other, you know, cafes, restaurants, all your lifestyle and convenience retail, and another 14,000 square meters of offices above that. That will be is actually set to be handed over at the end of November, also 2024, which is, again, a really great amenity for those who will be buying in Sunbird, which is only due to be handed over in the middle of 2025. So, you know, all of this massive bits of construction right on your doorstep are going to be done and ready and waiting actually for you to come, which is always nice, because I think anyone who has previously bought in an estate, or, you know, just, you know, it can be kind of a construction zone for 5 to 10 years. And that's certainly not the idea around here. So again, this is that road that we spoke that's going to be extended over the Liesbeek River, connecting to the M5, the Liesbeek Parkway, which sits around here between Riverlands and Black River Park, and then continuing into Salt River Circle and to town. Again, a hospital nearby, University of Cape Town, everything that you really need on your doorstep. This is a really good, okay, so what I've zoomed into is our Eco Park, which separates Amazon's headquarters from the southern part of the precinct. It's 2 hectares of landscaped public space. Great for, we'll have 6 kilometers of running trails, which also connect into the Two Rivers Urban Park. So if you get tired of running loops in your neighborhood and you want to head all the way out to the Rondebosch Common or on to yonder peaks, that's certainly up to you. But I think it's really important because we really do want this to have a landscaped and environmental feel where people can be amongst the trees, picnic, and enjoy it with friends. That's certainly one of the most important things. A part of buying here is not only what you get inside of your apartment, but what's outside your front door as well. Another good example, this is the plaza of the Riverlands Mall. Again, great, nice public open space. Restaurants will abound here, coffee shops, and everything that you would need for your daily needs. You would never even have to leave, which is, we assume that people will go sometime. But I think the idea is certainly from a traffic point of view and from a kind of day-to-day convenience point of view, you can live a much more pedestrian lifestyle, which Cape Townians aren't used to. We do have a tendency to get in our car for everything. So having a supermarket, a coffee shop, all of that right across the street where you can kind of walk back and forth is really something that I think, and in a controlled and secure environment, I think is something that is going to be really, really appealing to people who would like to own and live, and certainly for investors who will rent out either on a long-term or a short-term basis. Another good example, these are the offices sitting above the mall, looking over the Liesbeek River. Again, there's been a huge environmental rehabilitation of this somewhat fouled, concretized riverine area, and we are going to kind of rehabilitate it back to its natural state. We fully expect, quite a lot of the indigenous fauna to return, which is quite exciting, because we almost extending the Roppenberg wetlands, which is kind of our neighbor to the east, between ourselves and the M5, to kind of extend out which into an area which was not taken care of previously. This is a really nice shot of the First Nations Heritage Center. This is going to be, in our opinion, again, an iconic building, museum, meeting place representing the First Nations and cultural heritage. The same way that people visit the Slave Museum or the Zeitz-Mocha for African art, they will certainly come here as well. And it's a great showcase, of local culture. It's going to have a medicinal garden and a place for people to meet, to congregate, and we certainly think that it will become one of the tourist attractions for the benefit of the First Nations. Again, another shot, again showing those trails. I think I see Sipa there taking a selfie somewhere around, and yeah, I think it just really shows, we really wanted to have a nice mix of density and open space. Without density, you can't do services. You can't get Checkers to build a massive supermarket there if you don't have people. But on the other side, everyone wants to have the garden. So I think we've shown to be able to have both. Is really allowing people the opportunity to really have that mixture. Sorry. So, like our backgrounds, although I'm blocking the mountain, so I'm showing you. This is Sunbird, the first phase. There will be at least another phase. So we're talking. This phase has 270 apartments for sale, and there will be anywhere between 600 and 700 apartments overall within the precinct. This will have its own pool and deck, as well as gym and laundry facilities private to the residents of Sunbird. There's 2 towers, with every sitting above parking. And I'm looking at this with you as if I'm standing on the roof of the Riverlands Mall. So it gives you a really nice perspective of what, the views that you'll see and everything around. That is not a computer generated mountain. That is the mountain in all of its glory, Devil's Peak, with really beautiful views from essentially the 3rd floor up, probably even lower down, because you really have nothing in front of you all the way to the Liesbeek Parkway and to the west and on the east side as well. So there's an array of studios, 1 beds and 2 bedroom apartments. As I said, pool and deck, as well as gym. There will be 24-hour security. There will also be security within the precinct. Every building will be a member of the HOA, the Homeowners Association. So the commercial and the residential and the retail. There will be contributions to maintenance of the roads, electricity, all the landscaping, and obviously security as well. So there's many, many layers of this place, and it's really going to be an environment that you're going to feel comfortable living in. We also include as I talked about before, how we integrate service into our offering. We have a subsidiary company called Bunny Digital, which provides all of the internet in all of our businesses, all of our developments. What we saw about 7 years ago, is that the traditional fiber network operators weren't really providing great service to our owners and to the tenants of our investors. And also, it was kind of getting out of control. You had left, and all of a sudden you'd come back a year later and there were like cabling on the facade of a building, which as a developer, it feels like a really travesty. You put all this time and effort into designing something and someone just runs like a conduit over the front of the building, which was very upsetting. Mm-hmm. And so we said, we need to design this into the building, which we did. And now all of our buildings have a pre-wired internet. You show up, whether you're an owner or a tenant, and within essentially 24 hours, you're hooked up to the internet. There's no contracts. It's essentially the cheapest and the fastest internet there is in Cape Town. And we can do that because we preemptively designed and worked it into the development. And we'll have parking for all the apartments. So 1 bay for a studio and a 1-bedroom, and 2 bays for a 2-bedroom. We were speaking about stage 6. I don't know, stage 8. Hopefully we back down to stage 2, maybe no stages. That would be obviously, we so used to it. We said, let's get to stage 2. But actually, you really don't want any stages at all. But until we know that that's going to happen, we put in a generator. So there will be full load shedding backup. Again, it's just become part of the landscape of development. People want to know that they can keep their lights on, keep the air conditioning running, et cetera, et cetera. I hope we put it in, we never use it. I really do. I would be very happy, but we obviously have to be conservative going forward. I mentioned all the other things. I think the river and the running tracks is really, really important. You're really going to have your ability to step outside and run around, be in nature, even though you haven't left your home. I think it's it's actually what Cape Townians come to expect living in Cape Town, which I think is really, really exciting. Just a typical example of a layout. You have your mix of units. This is actually your pool deck on the side. There's your gym that actually comes off onto your pool deck. So this would be your 3rd floor. I think this was a good example. This is your internal road between the shopping center and Sunbird. The Leesbeek Parkway is all the way somewhere over here. So in terms of distance into busy roads, you got quite a really nice buffer. The M5 is somewhere behind me if I'm looking at it like this. So you're really not next to, you have great accessibility, but you're not on top of the road, which I think is really important. Some good examples of the interior. We love our industrial chic in Cape Town. So vinyl floors, concrete soffits, bagged brickwork. But it doesn't denigrate the design. The kitchens are quite high end, light fittings. Everything that we've done has been highly thought about and designed by our architects, Vivid Architects, brilliant guys we've worked with for years. They did our building in Woodstock, Wex 1. They've done a lot of work in Century City, and really, really great designers know what they're doing. So then just a good example, typical 1 studio apartment, starting in at 31 squares, going all the way up to 50 squares, if you include balconies, which almost every unit has. Again, shows you, your bedroom, your living bathroom, but still very livable, not the real micro side. We don't go under the 30 squares. We start at 31 and go up to 50. And as I said, every unit comes with a parking bay. Here's your 1-bedroom, again, typical separate bedroom, your cupboards, your kitchen, bathroom, everything separate. And your 2-bed, 2-bath typical apartment as well, starting at 66 and going all the way up to 90 squares. Some of these units, especially the ones on the higher floors, are going to have exceptional views of the mountain. On the east side, great views overlooking, kind of the suburban parts of the city out to the winelands and, Hout Hollands. So really, because you're kind of in your own precinct, you're really going to have almost 360-degree views, which is really, really exciting for people. And again, I think something to discuss, to talk about from an investment proposition, between Amazon and the other commercial tenants that will be part of the other offices, you're going to have thousands of skilled workers, employees, coming in and out of this place on a regular basis, which in our mind is an essentially unlimited supply of tenants for people and on sales. The typical staff member of Amazon is a highly skilled employee with good income. He's earning essentially rand dollars or however they do it. So I think from a rental point of view, this is going to be a very, very good bet. And I think that's also going to promote a short-term rental market as well. Maybe not in the off-season nightly visits, certainly in season, as Cape Town just gets silly, during that December, January holiday. It's hard to find something anywhere, but certainly business travelers, people who come in from all over the world who will be visiting Amazon's offices, it's really going to allow for that short-term letting opportunity to take place, which is another reason why we've developed our company called Perch, which essentially manages short-term letting on behalf of our owners, and can take care of, again, that kind of, asset where you've bought the unit, but you don't want to actively manage it yourself. We can take all of that over for you. And again, we just mentioned the tax incentives. If you do buy 5 or more units from a developer, it doesn't have to be in the same development, but if you do buy 5 units, there's some great tax incentives that people can get into. So again, sorry.
No. I think you are closing off here, David, because I think we are running out of time, and we also want to extend an invitation to everybody tomorrow because there's a big public launch. So I hope you're going to add that into your repertoire in your closing statement.
I am done. I do get quite excited about it. It's a very big development for us. It's a multi-billion rand development over the phases over the next few years, and it's great and big for Cape Town. I think if you wanted to talk about confidence boosting, I would like to think that people see that we have the confidence to go ahead with something like this. They should have the confidence to follow behind us. We are launching tomorrow. It's going to be on site, so you'll be able to get a really great idea of where and how to get there. You can register even today at riverlands.capetown. Come and see, and hopefully there'll be some units left over by the time you get there.
Absolutely. No, wonderful. Thanks, David. I think it's really exciting. I mean, a few observations I'd just like to add. I mean, you essentially are changing the landscape of Cape Town, and it's going to be certainly a key development. The other thing that we spoke about earlier is your pricing. You've really obviously got to understand that. So that location, the pricing, and that kind of thing. And then what we were talking about offline before we got into the webinar was the impact that Amazon is going to have on employment. And this leans into Siphlamanda's story as well, where I think you mentioned, it's something like 6,000 employees. Is that correct? So something like that, which is massive. So I'm going to give you the opportunity to close on that, maybe just in closing thoughts. But I'm going to ask Siphamanda, because I can't believe where the time's gone; it's just disappeared. So Siphamanda, maybe just give us your lasting thoughts, just in general, on the economy, and then obviously just pertaining to this particular development, which I know you've been partnering up. You've also been on roadshows with Signature on this particular thing. And maybe give your final thoughts, your parting shots that people can walk and take away, because I think there's been some more positive than negative news, which is great to hear. So your final thoughts here, Siphamanda.
No, look, absolutely. Just to reiterate on some of the trends that we are seeing, that sets Cape Town apart from the rest of the market. The first one is just the infrastructure development. We were quite impressed with just the quality of infrastructure development, which you don't see anywhere else in the country. And the second one is in the country, we have been in this unfortunate in the last 10 years, like the middle class hasn't grown that much in the last 10 years. We've sort of stalled from 2007 or so. What's happened though is that different regions are just cannibalizing on each other's middle class, and that's where Cape Town has done particularly well. And then the other one is just the level of service delivery. So I think the market, the Cape Town market, the Western Cape market in general has done well on those three counts, and that's why we are seeing this capital appreciation in Cape Town. This is my last parting shot on the investment. Obviously, I've been with David for the last since last week. We've been speaking about. For me personally, it ticks the three very important boxes. Around are you able to capture long term and short term at the same time? Are you able to capture the new guys that are coming into the workplace? We know that these guys are quite different. They come with different perspective, different attitudes, and then for me, it does tick that box. So I'm really excited about the investment, and I wish all of those involved in this development all the best.
Wonderful. Great stuff. Thanks, Siplamanda. Wonderful to see. And thank you for your wonderful input today. I think it was really insightful in terms of what's happening on economy and that kind of stuff. So David, so I'm going to hand over to you in closing. I mean, you got the final word, which is great. I see there's a question there, expected rental returns. I think it might be early for that, but you can maybe just share a little bit about that. But maybe just your closing thoughts about, this big development. It's a massive project. It's really exciting. As I say, it's like really changing. And thank you for your, for sharing that. And I can see you extremely passionate and excited about it. So maybe just give the audience, so everybody, just you're all invited tomorrow. So if you are in Cape Town, please, it's Riverlands.Cape Town. I don't think you can forget that one, Riverlands.Cape Town. And you can come along. I think it's from 3:00 and it's on site where it is. And I know there's extensive development there. We can actually see the highways, and you've given obviously all the timelines and that kind of stuff. But yeah, maybe just give your parting shots and thoughts, and maybe people can even come and see you tomorrow.
Yeah, you can see me. I'd love to have a chat to everybody. In terms of, we have done rental forecasts. We're looking at, and this is based on data, which is one of the nice things about having these, rental companies. We have real data to base these things on. It's not just shots in the dark. We're expecting anything from 14 to 16, 15,000 Rand a month for studios, then 16, 17 for one beds. 18, 22 for two beds, potentially more. Remember, we're handing over in the middle of 2025. So it's a good 20 months away. So these are numbers that are based kind of on escalations of what we're receiving now in and around Woodstock. Which we think is pretty conservative, because Woodstock, while generally nearby from a vicinity point of view, I would say this from a servicing point of view is going to be in much higher demand. So I think, we're saying it's about a 7 to 8 net return, rental return, not including capital appreciation. So yeah, I think, you mentioned the employees. I think that's what it comes down to. If you a buyer to live, I think we've shown that it's someplace that you would want to stay. And ultimately, if you're an investor, it should be the same. Is it somewhere where someone I want to rent to would want to stay? And I think the combination of the amenities and the number of employees who are going to live and work around the area really just answers that question. If you can cut your commute down from a 45-minute or over an hour drive to a 3-minute walk, I think it really does get people to start doing the math on, do I need a car? Do I need this and all of that? And they start really looking at the budgeting and what they can spend in terms of, disposable income. So we're quite excited about it. I think the selling will go quite quickly. So we really do encourage everyone to come down and ask us a few more questions.
Wonderful. Great. Thank you, David Cohen, Managing Director of Signature. Thank you very much And to our audience, please join us tomorrow. It's from 3:00, I think it is. And as I say, just go to riverlands.capetown. It's an open invitation there till from 3 to 7 tomorrow. So please go along, go get those units, snap them up. I can already see David is saying that they're running away quickly from the roadshow. I think Siplamanda bought up most of them, and I'm not quite sure. No, so certainly I'm putting a sort of a shout out to everybody, to come along. Thank you. Our engaged audience is wonderful having you. And then, of course, Siplamanda, Chief Economist of FNB, thank you. Wonderful for your insights. It's always great to see what's, you've got your finger on the pulse of the economy and all the dynamics of that. And wonderful. Thank you for sharing that today. So audience, your participation has been great. We trust your knowledge. You gain more knowledge, but you also inspire you to start investing on your wealth creation journey. And I mean, this is a prime piece of property. And in 2023, it's only going to be up in 25. So David has already spelled it out. So this is a massive opportunity for somebody to get a great capital gain. And with all things in place, the Western Cape and Cape Town in particular could be shooting the lights out. And that's the optimistic prediction out there. And then, of course, before we conclude, mark your calendars for our next webinar. It's in fact tomorrow, where we're going to be talking about the residential rental market, of which Siplamanda actually shared quite interesting the low vacancies in the Western Cape. And we're going to be just talking a little bit more about that. But it's free to register. You just click on the link on the below or the chat box, visit REI website or navigate the events tab. Once again, to David Cohen of Signatura and to Siplamanda, Chief Economist of FNB, wonderful. Thank you for your invaluable contributions. We will see you all tomorrow at the launch of the Riverlands. Really exciting. Just go to riverlands.capetown. We'll see you there. And if anybody has any specific queries, you can reach out either directly to David or just drop an email to info@rei.co.za, or just go to the link. If you do put your name onto the link of riverlands.capetown, they will certainly reach out to you. So let's part with a famous property quote: real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for full, and managed with reasonable care, it's about the safest investment that you could ever make in the world. So until we meet again tomorrow, and in fact, we hope to see most of you also at the big launch of Riverlands. This is Neil Peterson, a real estate investor, David Cohen of Signatura, and Siplamanda Kunazi of FNB signing off. Goodbye, everybody. Lovely seeing you, and we hopefully see you tomorrow. All the best. Thank you very much.
Hello, I'm James Voss, the City of Cape Town's Mayoral Committee member for Economic Growth. Over the last 2 years, Cape Town has been one of the predominant drivers of employment growth in the country. In fact, while Cape Town typically accounts for around 10% of South Africa's total employment, it has contributed approximately 34% of the country's total employment growth between the second quarter of 2022 and the second quarter of this year. This is because our City of Cape Town government is deeply invested in the development of the region. Practically, this means investing in infrastructure that serves our fast-growing communities and in the communities themselves by way of skills development initiatives that boost the workforces of our high-growth industries and projects and programs that support both small and big investors. I really wish that I could have joined you for the webinar, and I hope that you all enjoyed today's discussions, and I look forward to hearing from the business owners and investors watching right now who are keen to set up shop in Cape Town.